All right, so published accounts. So this is a topic that can come up as a 60 or a 100 mark question on the higher level paper, as a 100 mark question in the 15 years, kind of '05 to 20, it's come up 5 times. So it gets examined as a 100 mark question in section 2 often enough. The topic we've done that it is most like is final accounts of a company. So it's kind of like a section 1, a slightly shorter version of a section 1 final accounts question. And just because it's larger companies that tend to have to publish accounts, it'll be more like the company accounts that we've done rather than sole traders. What is it? It's if you go on the website of kind of a large company, you will be able to access and view their financial statements. Okay, included as part of those financial statements will be a profit and loss account and a balance sheet. The profit and loss account and balance sheet you see won't contain as much detail as a profit and loss and a balance sheet like we've done in final accounts questions. So, for example, this is from the chapter on company accounts. And you'll notice in the name of that chapter, it says company accounts internal use, okay? Because accounts in these sort of detail tend to just be for the people within the company, okay? They don't kind of issue or publish accounts with this much detail to the public, to the shareholders, for people to view on their website. So you can see here, under cost of sales, we've got opening stock plus purchases less closing stock. That gives me cost of sales. So I show all the items that go into cost of sales on one of these questions. This is what a published accounts income and expenditure, or sorry, profit and loss will look like. You see they just put in an item for cost of sales. So you don't put opening stock, purchases, closing stock on the face of the profit and loss. You do it as a working and you just put the total on it. All right, so you're not going to list all the admin expenses. You're not going to list all the selling and distribution expenses. Other income here, there's a couple of items under that. You're not going to list those separately. If you look at it, they just list distribution costs, they call it, administration expenses, other operating income. They just put in one item. So you just total them in a working, or in some cases, in a lot of cases, they will be totaled for you in the trial balance already. And then you put in the total into it. So it's nearly like putting all these headings in bold a little bit and just kind of collapsing the profit and loss a little bit and just putting in maybe headline numbers. All right, same thing then on, so just maybe just to go down through this profit and loss account. So turnover, that's just, you can ignore the numbering here on the left hand side. Turnover, that's just sales less cost of sales. We put the total in, that gives me gross profit. Take away distribution costs, take away admin expenses, add on my other operating income. So add in just other income, other operating income. That gives me operating profit. Okay, so I got my gross profit, then take away distribution costs, take away admin expenses, add on other operating income, and that gives me operating profit. Then I've got these 3 items here, exceptional items. So there's all sorts of kind of rules around what an exceptional item is and when should you put it on the profit and loss as a separate expense item rather than putting it in with admin or distribution costs. The big one that comes up on our course is the profit on the sale of land. Okay, so if a company is holding land and it sells it for a big profit, that's not really the company's kind of operations doing really well. That's not the company kind of buying and selling its main product really well and making a profit because of it. So if you put that profit on the sale of land in maybe as other operating income, okay, or if you put it in as turnover, if you put it in further up, it would look like the company is really, really profitable from its operations. It's doing really, really well. And it might not be, okay? The company could be loss making up here and then sell some land and it looked like it's making a big profit. So anything like that, we put in as a separate exceptional item. As I said, there is a whole load of rules about what should go in there. It's profit on the sale of land that tends to come up in the questions on the course. Income from financial assets, so that's just your investment income, will go in separately. Amounts written off financial assets, they tends not to come up Okay, but it's this kind of middle section here is maybe the new bit that we haven't seen before. Amounts written off financial assets, as I said, it hasn't really come up that much on questions. Take away interest payable, like we've seen before, that gives us profit on ordinary activities before tax. Then I put in my tax, profit on ordinary activities after tax. Then I put in the dividends, take that away, it gives me profit retained. Add on the profit from the start of the year to the profit for this year. That gives you the profit retained at the end of the year. That bit at the end is very like the bit at the end of a company account question. So kind of in the company's ones, we would have done interest, then tax, then dividends, and then added on the 1st of January profit and loss to this year's profit and loss. So this bit is like the trading accounts in any kind of final accounts question, just collapsed down, not actually listing out all the expenses, etc. On the profit and loss. This bit at the end is just the end of a company accounts profit and loss. It's just these little few in the middle here that you might need to remember to put in. And as I said, that kind of one there doesn't tend to come up. The balance sheet then that's just an explanation of what might go into each, but you'll get that as you go through questions. The balance sheet then, more of the same. Okay, so it's the balance sheet we've seen before with just less detail. Okay, so fixed assets, intangible assets, tangible assets, financial assets. We've seen all of those on balance sheets before. You will note we are not putting in cost, accumulated depreciation, and net book value on the face of the balance sheet. So we just enter the net book value. Okay, we're going to see now what we do with the rest of it later, but it's just the net book value we put in. We don't list out motor vehicle, land and buildings, furniture, etc. Okay, so we just put in one total for tangible assets. All right, so we're putting in a lot less detail than I'd put in a final accounts question in section 1. Current assets then, the 3 that you put in are stocks, so closing stocks going in there. Debtors, that's kind of a catch-all for everything. So trade debtors is going in there, but also like say income due and stuff like that. They're going to go in with debtors. So that's trade debtors and just also all the other debtors just kind of put in there. And you show the cash and bank separately. Okay, so the bank figure, the stocks figure go in. Everything else then just goes in with debtors. Then you've got your less creditors, amounts falling due within 1 year. Here, I think the book leaves out something here. So trade creditors, so you just put in the trade creditors on their own. Tax and social welfare goes in on its own. So they'll generally tell you how much tax the company owes for the year in a note, and you'll put it in there. And then everything else that normally goes into creditors, you'll put in another item called other creditors. Okay, so that's kind of missing there. There should be an other creditors item there, and that's like your catch-all here. So debtors here, up here, kind of gets everything. Down here, it's other creditors that catches everything that would normally be maybe listed out here. Like you've got your investment income due here and your debenture interest due listed on the face in a section 1 question. You're not going to do that. You're going to total them and put them in with debtors or other creditors. You've got your net current assets. You add that on and you get your total assets less current liabilities as normal. You've got your right finance by, but you've got your finance by section down the bottom here. So creditors, amounts falling due after more than 1 year. So debentures are long-term loans. Provisions for liabilities and charges. Capital and reserves, so called up share capital, share premium, revaluation, other reserves if they're there, and profit and loss account. So we've seen all those before. We're just listing them. Again, a little less detail in a final accounts of a company question. We show the authorized and issued share capital separate. We don't need to do that. Okay, we do deal with that elsewhere sometimes in a question if asked, but here we're just going to put the answers in. So the profit and loss and the balance sheet are that little bit shorter, a bit more concise than in a section 1 question. You're going to do a bit more in the workings in terms of totaling stuff up and just entering totals into the answer. All right. I will do an example in a separate video, but just to look quickly at the example and what you get asked to do. So here we get a trial balance. As I mentioned before, like admin expenses and distribution costs is what's in there. Okay, rather than making you go through it and find what are the admin costs and adding them up. they're kind of giving you the totals. Now we might have to adjust them down here. A load of adjustments as normal. Okay, you have a little bit less time than you would a section 1 question, so I would say that the adjustments aren't going to take quite as long. And like a kind of section 1 question, you see the same stuff coming up with 1 or 2 little differences year after year. What is new that you're asked to do? So you're asked for a published profit and loss and balance sheet. So you will produce the profit and loss and balance sheet in the format I ran through really quickly there. Bit more workings. So you see here in the workings, they total up the cost of sales. They adjust admin expenses a little bit here and then just put the numbers directly in to the profit and loss and the balance sheet. What you are also asked to do, so as I said, say for something like fixed assets, you just put the net book value on the balance sheet. But then if you were to ever look through a company's financial statements, after a page of a profit and loss and a page of a balance sheet and maybe a page of a cash flow and 1 or 2 other statements, there is pages and pages and pages of notes in the financial accounts. So the detail that is left out here on the face of the profit and loss and balance sheet is then put in later in the financial statements as separate notes. All right. We tend to get asked to do 4 or 5 of those notes each time this comes up. Okay, usually 5. All right. So in this case here, we're asked to do the accounting policy note for tangible fixed assets and stock, operating profit, contingent liabilities, dividends, and tangible fixed assets. There's about 10 or so of those that can come up, but there's some that come up more often than others. Okay, so of these notes, that first one, the accounting policy note on fixed assets and stock, I think has come up every year with a published accounts question. The operating profit one has come up every year. Tangible fixed assets has come up every year. Okay, the contingent liabilities comes up occasionally, not that often actually. The dividends comes up a little bit as well, but the two of them a little less likely. Other stuff is cycled in for them sometimes. I'll do the 5 of those when I do the example, but just to kind of read through the different notes very quickly. So as I said, this is kind of filling in a little bit of the detail that's left out because your profit and loss and balance sheet are that little bit shorter. So your accounting policy notes on tangible fixed assets and stock. So that's just a little bit that you need to kind of learn off, and you'll insert some information from the question. I'll do that one as part of the example, but it does come up every year. Operating profit is literally just listing. Operating profit is arrived after charging, and there's a few expenses that you need to list. You need to kind of highlight that that's how much these particular expenses were: the director's fees, the auditor's fees, depreciation. As I said, comes up every year, so you'll get well practiced on that one. Interest payable is just simply saying interest payable on 10% debentures is 10 grand. It's a really short one. If it comes up relatively frequently, and it's a really short one to do. Dividends note is really short as well. So you're going to get like a total dividends figure that goes in profit and loss. Some of it will be ordinary, some of it will be preference, and you just separate it out in the note. Financial fixed assets note has come up a few times. That is literally just taking the financial fixed assets from the trial balance, and you might have a note that they've gone up in value, but it comes up rather frequently. It's quite a short one as well. The debentures one hasn't come up that often, but it is just listing the debentures the company has. Tangible fixed assets. This is putting in that kind of cost, accumulated depreciation, net book value detail that I put in from the balance sheet. We show it in a slightly different format. We also have to kind of put in disposal and revaluation kind of in the note. So it can be one of the longer notes, I would say, but it does come up every single time this comes up. All right, and it is kind of like something we've done in section 1 balance sheets before. Exceptional items. So as I said, the likes of the sale of land is the one that comes up all the time, and the profit on sale of land is the one that comes up all the time. You just describe what happened. So that'll be given to you in a note, and you're just writing it down again. All right, hasn't come up that often. Capital expenditure commitments has come up once or twice. Again, you'll be given, so this is like any big capital expenditure the company's going to do in the future that they've already kind of committed to doing. it'll be given in a note and you'll just be writing down the information from the note again. Okay, so you'd be kind of happy to see that one come up. Share capital, I don't think I've seen come up, but it is just, it's basically, it's that authorized issued bit from the bottom of a section 1 company balance sheet, just shown separately as a note. And then contingent liability, that's just a little note that you'd be given in the question, in the additional information, and you're writing it down again. There's a couple of different treatments of contingent liability that I'll get into when I do the question. All right. So look, it's as I said, it's very like a section 1 question. The notes are the kind of, the layout's a little bit different. The notes are new, but the notes are quite repetitive. So I think it's a good one to spend some time getting the hang of. Just on this one looks for profit and loss balance sheet and notes. That's what a 100-mark question does. A 60-mark question just leaves out the balance sheet. So you look for the profit and loss account and the notes. Okay, but it's the 100-mark ones that we're interested in. As I said, I will start working through this question in a separate video.